Hello and welcome to UK Property Accountants. My name is Chirag, an analyst here at UKPA. Today we're taking a look at tax on rental income, and to give us some valuable insight on it, we are joined by Ashmita Prajuli, a certified chartered accountant associated with the ACCA and a senior associate in our client advisory and relationship team. Welcome to the show, Ashmita.
Thank you, Chirag.
To begin with, Ashmita, could you please tell us what is the tax on rental income?
The tax on rental income is the amount of tax that you pay on the rental income that you generate. And the amount of tax you pay is determined on two factors. First, it would be a total income that you generate, and also the tax band in which your income falls. And for the calculation of taxable rental income, you can also make a deduction of allowable expenditure, and which gives you a figure of net rental income, which is taxable.
Who is required to pay tax on rental income to the HMRC?
So any individual, partnership or company that owns property and generate a rental income from the property in the UK has to pay taxes to HMRC, and this includes non-UK resident, UK resident, be it a company or individual.
What deductions are available from rental income to help us pay less taxes?
So generally, there are several deductions that is applicable for the deductions, and some of the example would be mortgage interest, any sort of property repair maintenance fees, council tax, utility bills, and day-to-day expenditure for managing this property. And it also includes advertisement expenditure if the property is advertised for letting purpose. And the letting agent fees, any sort of property management fee are all subject to deduction from the rental income. And for the mortgage interest, the deductions is slightly different, and there is a different arrangement applicable for individual and the company. And if it is for the individual will get a 20% tax credit of the total mortgage interest that they have paid in a year. And for the company, 100% of the mortgage interest is subject to deduction from the rental income.
Ashmita, we just talked about the deductions that are available. Are there any allowances available for rental income?
Yes, there are few allowances that would be applicable, and one would be property allowance. So for the property allowance, if you rent out a property and generate rental income up to £1,000 in any tax year, it is tax-free. And the allowance of 1,000 is applicable either for one property or multiple properties in any relevant tax year. And another would be a rent-to-room scheme. So under a rent-to-room scheme, if you let out a room in your main residence and generate a gross rental income up to £7,500 in any tax year, it is tax-free, which means no tax is payable up to that amount.
Finally, Ashmita, what is the reporting deadline for rental income?
So there are separate reporting requirement if it is for individual, partnership and a company. So for the individual and partnership, if a paper tax return has to be filed, then it has to be done by 31st of October. And for the online filing of self-assessment tax return, it is 31st of January. And by the 31st of January, the reporting of self-assessment tax return has to be done to HMRC, as well as the relevant tax has to be paid. And for the company, the taxes has to be paid within 9 months and 1 day after the financial year end of the company.
Thank you so much, Ashmita. You've been a great help to us as always. Tax on rental income can be a pretty confusing topic. To get professional advice, please feel free to book a free 15-minute discovery call with a member of our team, where we will ascertain your situation and let you know of the services that best suit your needs. Thank you and have a great day ahead.